I would say that see, I believe in cycles, and one thing is that because of the Trump trade, that upside is captured in IT. Because everybody has believed, and rightfully so, that Trump will focus on US growth. Yesterday, Trump has commented, I think, on Davos that he wants lower interest rates globally, right? Which is good for IT. He is going to cut corporate taxes in US, which is good for IT spending. So I would say that things are looking good. There is no problem in IT. But the point is valuations, right? While on the other hand, on the domestic side, because we had a very bad 9 months because of lack of government spending and also urban consumption suffering due to higher inflation, things are bottoming out. I am a believer of cycles, and that's why I am more bullish on domestic cyclicals today, if you ask me, from risk-reward perspective. Like ICICI Bank, I told you, like TVS Motors, for example. If you hear Mr. Sudarshan Venu's commentary in Davos, day before yesterday, he has said that January has been excellent for them. Right, they are gaining market share. They'll become the top market share in EVs, in EV scooters in January. And if a company, a high corporate governance company like TVS Motors, which has excellent balance sheet, robust cash flows, and of course market leadership in many spaces, plus they are present across the segments, right, across price points in two-wheelers. If such company comes and tells you that from January things are recovering, you have to believe it, right? So things like TVS Motors, for example, yesterday on Ultratech's call, Ultratech called out that now, at least in Northwest, the prices have also started to pick up. The demand is improving due to infrastructure spending. So I would rather buy domestic cyclicals like banks or cement or auto, selective like TVS Motors or some auto component companies, where I would be more structurally bullish from here on. Because the best of the IT you have seen, the best of and you have seen worst of the domestic cyclicals.
Okay, so even in this, in cyclicals and some of the stocks that you've told us about, SBI, you're also finding constructive, Ambuja Cement and Minda Corp. Talk about these as well.
So basically SBI, again, see, like SBI is, I think that is a real Republic sale which is going on in SBI today. 100% for sure. It is below one-time book. It is at a 6 PE. Okay, but the chairman has come on channel and said so many times that they are targeting 10% deposit growth and 14 to 16% loan book growth, which means their EPS growth will be 12 to 13%. 12 to 13% EPS growth is available at 6 PE. ROA of 1.2 or 1.3% is available at below book. And if there is an economic recovery, which is boosted by budget, of course, then the SBI, who can be the better proxy to play India than SBI? And remember, SBI's unsecured loan, which is the biggest problem for the industry today, is not a problem for SBI. They have a 3,41,000 crore book given to government employees for unsecured.
And a very large mortgage book.
Yeah, plus they have said on channel, and this I'm just quoting him, that their margins are stabilizing. Their EPS growth is in double digits. They don't have any problem of asset quality. Credit cost is only 50 bips. Unsecured loan is safe for them. This is what all chairman has said on channels.
Okay, so bullish on SBI, and just the other two we'll wrap up. Ambuja Cement and Minda Corp, because I want to get that flow of thought in.
So basically cement, again, as I told you, that cement is a domestic cyclical where I would recommend anyone who is not so much focused on stock specific and who wants to play, that every cement stock, when they declare numbers, buy them, because we are at the bottom of the cycle. Because from here on things are only improving. I have heard that things are slightly shaky in south and east, that prices have not gone up so much, but except for south and east, I would say, so for Ambuja, for example, it's a pan-India player, and they have done so many acquisitions. They will integrate, the cost synergies will come. I think from 2-3 year perspective, it looks like a no-brainer to me. Because prices have bottomed out, volumes are picking up due to infrastructure spending picking up. Of course, government will do something on housing. There is another stock called Aavas Finance, which is there in our portfolio, which we have bought because lowest credit cost company in my view in financials, because they give loans only against self-occupied residential property. And of course, definitely there will be some boost in housing in budget, because housing is a sector which creates huge jobs. So that is a booster to the economy. So